You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 30th day of April, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a purple button. Just click that. Fill out the form. We'll get your indicators up and indicating today. And you'll get 5 consecutive trading days on the trial. The weekend doesn't count against you, but it'll give you additional time to get familiar with the indicators. So, holidays, weekends, doesn't matter what day of the week or hour of the day you sign up for the trial, you'll always get 5 consecutive trading days. Now, it's 2 trials per lifetime, and they got to be 6 months apart. Okay? When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There are 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. This time, scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email. It'll automatically log you into our platform. The benefit of that is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy and can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are and how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have available, and it shows you we've been around a while. youtube.com/CFRN. This is our schedule for each afternoon broadcast. So we're going to dive right into our daily devotional. We started a new topic yesterday. We spent a week and a half on Easter and the Holy Week. And so now we're in day 2 of 15 after the cross. Today's scripture is John 15, verses 11 through 15. And I'll share it with you from the Message translation. I've told you these things for a purpose, that my joy might be your joy, and your joy wholly mature. This is my command. Love one another the way I loved you. This is the very best way to love. Put your life on the line for your friends. You are my friends when you do the things I command you. I'm no longer calling you servants, because servants don't understand what their master is thinking and planning. No, I've named you friends because I've let you in on everything I've heard from the Father. Again, that was John 15, verses 11 through 15, and that was Jesus speaking. So if you got the red letter edition, those words would be in red. So after the cross, a lot of times our hearts question God's love for us. We wonder if God does care about us, if He loves us. Sure, we can read about it in the Bible, but as we go through our everyday lives and face various things, sometimes His love seems like nothing more than a nice idea. And if we look at the places where we've stepped outside of God's guidance, it has probably been during moments when we haven't trusted God's love for us. We went and did what we thought would get us love. We decided we were going to handle things our way instead of God's. We decided we were going to trust ourselves, not Him. But again, Jesus said in John 15:13, greater love has no one than this, to lay down one's life for one's friends. His love for us is bigger than anything we feel or face. And He displayed it when He gave His life on the cross. So take a good look at the cross. Really look at it. The suffering, the shame, the blood. Feel the weight of the awfulness of it. Try to put yourself in Jesus' sandals. The moments of intense begging in the garden, the dreading but submitting to what was to come. The blows He took, the struggle to breathe. It's horrific, yes. But then ask Him to let your heart feel the weight of why he endured such hardship, why he chose to endure such hardship. He did it because of his great, unfathomable love for you. It is the greatest love of all, and he feels it for you. It's a love worth trusting in. Let's pray. Jesus, we thank you for calling us friends and not servants. You've made known to us the heart of the Father, and in you our joy is made full. Help us to remain in your love, to walk in obedience, and to love others as you have loved us. May our lives reflect the joy and friendship we have in you. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Wednesday. All right, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 217 points. NASDAQ is down 221 points. That's 1.25%. S&P 500 down 47, almost 1%. The Russell 2000 down 24 points, 1.25%. In the commodity basket, crude oil down $2.28, trading 58.14 last. That's a drop of over 3.5%, or $2,210 per contract traded. Gold down $14.60, trading 33.19 last. Silver down 71 cents, trading 32.56 last. That's a drop of almost 2.25%, or almost $3,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 205 points. The Shanghai dropped 7. The Hang Seng gained 111. And in the European markets at the close, FTSE up 31, DAX up 35, CAC up 38. So that gave us a mixed day in Asia. It was a green day for the UK, but it's a big red radio Wednesday here in the US of A. I remember yesterday, the Russell was the only one in the red when I gave you those numbers. And I said, let's see who plays follow the leader. And I guess we have our answer. To the news. Pakistan said it shot down an Indian spy drone in its airspace yesterday. The incident, which India has not confirmed, marks the latest escalation following a deadly attack last week in the Indian-controlled region of Kashmir. On April 22nd, at least 4 gunmen killed 26 people, most of them Indian tourists, in the resort town of Pahalgam. India says at least 2 of the assailants were Pakistani citizens and blames Islamabad for supporting separatist violence. Pakistan denies association with the gunmen. And to all you vets out there, the fall of Saigon, it's been 50 years. Today marks the 50th anniversary of the fall of Saigon, commemorating the end of the Vietnam War. A military parade in Ho Chi Minh City, the former South Vietnamese capital of Saigon, is expected to draw more than 13,000 people, including delegations from several countries. U.S. officials are not on the guest list, a mutual diplomatic decision, despite improved relations in recent decades. The anniversary marks the day North Vietnamese forces captured the city, ending nearly 2 decades of war and unifying the country under communist rule. Although American combat troops withdrew in 1973, thousands of personnel remained. On April 30th, 1975, the U.S. launched the largest helicopter evacuation in history, airlifting about 7,000 Americans and South Vietnamese civilians. The operation began with a coded broadcast of Bing Crosby's White Christmas over Armed Forces radio. The war's end also prompted a large migration. Today, more than 1.3 million Vietnamese immigrants live in the U.S. At the war's peak, about 543,400 U.S. troops were stationed in the country. The U.S. continues to honor Vietnam veterans through a 13-year commemoration set to conclude on Veterans Day. 50 years. Most of this audience probably remembers it. On Wall Street, the Federal Reserve is in a tough spot following new data today, reinforcing slower economic growth and higher inflation during the first quarter. Eggs are down, gas is down, a lot of stuff is down. But hey, you gotta believe what they say. It's on the internet, it's gotta be true, right? A combination that may eventually force the central bank to choose between its dual goals of maximizing employment and maintaining price stability. It was still a stagflation warning shot over the bow of the economy, according to Ellen Zentner, chief economic strategist for Morgan Stanley Wealth. This type of data won't soothe the markets, and it won't make the Fed's job any easier. How hard is it to lower rates? Just fix it. That's all you got to do. Just like Biden, he says, oh, well, I can't close the border. Trump did in one day what Biden couldn't do in 4 years, or didn't want it. Let's be honest, didn't want to do. And the Fed could simply lower interest rates. But, you know, there's a lot of animosity between him and Trump, so probably won't happen. Home contract signings rose more than expected in March, as mortgage rates hovered around their lowest point this year. The pending home sales index, which tracks contract signings on existing homes, jumped 6.1% from February, according to the National Association of Realtors. It's the biggest month-over-month increase since late 2023. Private employers added fewer jobs than expected in April, as a sense of unease led to a slowdown in hiring, and investors watch for signs that tariffs are weighing on economic growth. On Wednesday, data from ADP showed private payrolls grew by just 62,000 in April, far fewer than the 115,000 expected by economists, and below the 147,000 new jobs added in March. This marked the smallest increase in private payrolls since July of 2024. Again, lower the rate. From Reuters, Dutch chipmaking equipment supplier ASM International has started local production of tools for U.S. chipmakers in response to the U.S. tariffs backdrop. Their chief executive said today, "We've already started to manufacture some of the tools for our customers in the U.S. just to get us started. I think that our global installed base, our global infrastructure, allows us to really have manufacturing in many places, and Phoenix, Arizona is one of them." ASM is the most exposed to the U.S. market among European peers, such as ASML or BESI, with U.S. sales accounting for 21% of its revenue last year. Google hopes to enter an agreement with Apple by the middle of this year to include its Gemini AI technology on new phones. Interesting, because they're already in the middle of an antitrust trial, so you might want to slow the roll there. And last, why did the IMF block Colombia's access to a credit line? The International Monetary Fund said on Saturday it had set conditions for Colombia's access to its $8.1 billion flexible credit line, a precautionary tool for crisis prevention and mitigation, effectively cutting access for the country from that cash. Colombia had access to a similar tool since 2009, but has only made use of it once in 2020 when the pandemic wreaked havoc on the global economy. But the IMF move shines a fresh light on the country's fiscal issues, which have been troubling financial markets for months. Analysts said the implication of losing the FCL access was a rise in borrowing costs, which was already seen in an April 15 Eurobond offering. Now, if you don't know what an FCL is, it's a fund program that requires the applicant country to have strong economic fundamentals and institutions and a willingness to keep both. It can last for 1 year or 2 years and has no preconditions once triggered. So there you have it. And now for the good news. Logic 247. That's our 24/7 around-the-clock Emini alert service. Now, it's not just E-minis. It's also crude, gold, silver. We're currently in week 352. Over the last 352 weeks, we have issued over 19,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. Of course, she'll update it again this afternoon, as she does. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 38 Logic 247 alerts. Still waiting on the outcome of 13. Now, she did the recap pretty early, so I'm sure some of these have resolved themselves. But at the time of the recap, that gave us 25 actionable alerts of which 3 or 12% would have been stopped out, again based on market structure and a simple process we teach all of our passport holders. Every logic alert has an entry price and an initial target designed to help you get your goal for the day. Usually additional targets and then a final trade to target. The logic alerts can come out anytime around the clock. 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Now, the purpose of the Logic 247 alerts is to help you learn how to read a chart. Yes, you can trade them, but make sure you focus on the real purpose. You want to be able to look at any chart of any market, and along with the help of our humble indicator set, instinctively know what the next high probability move is. You want to be able to look at a chart and instantly spot where the next potential resistance is, where the next potential support is, thereby revealing the windows of opportunity that lie in between those two very important inflection points. Now, again, we're over 19,500. We're approaching that big round number at 20,000. So, again, use the logic alerts, and it can even be a market that you don't trade. Used properly, it will still help you learn how to read a chart. So, I hope you do. Now, 352 weeks, that's a mighty long time. But way before we had a Logic 247, we had our original alert service, the Concierge Trade Alerts. Now, they're different. Number one, they don't come out around the clock. In fact, they're posted either 5 minutes before the open or shortly after the open. So, looks like I forgot to change. Yep, I forgot to change Monday to Tuesday. At least I got the date right. Here, let's fix that now. I said I was going to hold off because we're in earnings season. We've been having some gaps of late, which is unusual for futures in the middle of the week, except on Sunday night and during earnings season. But I went ahead and just got them out early last night. So what that means is all members and all trial members had all of these targets 5 minutes before the Wednesday session began last night at 6 p.m. Eastern. S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So with that, let's go take a look at the chart, see how things went. All right. S&P 500 E-mini futures daily chart. Now, we've talked about how the 50% fib retracement is always a big deal on a daily chart. And we've been stuck here for 1, 2, 3, 4. This is now our 5th trading day. We had a red candle all the way down to the BBC, that's the green line. And we've bounced nicely, almost back to the 50. Now, we knew we were going to run into some issues. Yesterday we talked about it, getting this gap closed. Now, it looks like Let's see, yesterday's high was 55.97 and a quarter. We'll just call it 55.97. And the close over here was 55.84. So the high 97 and the close 84. So we did officially close the gap. And as often is the case, once we hit that resistance right there, it sends price scattering in the opposite direction. But right here we had support times 2. When price pulls back to the VBC, we expect support. And when price pulls back to blue and climbing, that quite often is support. So that's why we call it support times 2. So to get away from this 50% fib, what has to happen? We got to take out yesterday's high. Okay, and once we get up into this area, okay, if you look over here, then we got some pretty clear sailing up to the 62% reverse fib. But first, this high has to be taken out. 55.97 and a quarter yesterday, 55.83 today. So pretty substantial difference there. Now the green line is called the VBC because it stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Price travels in legs. Leg, retracement, leg, retracement, leg, retracement, leg, and then a retracement. Now, notice that if the trend down were going to continue, we would have taken out this low. But we hit that 24% fib and reversed course. And we had blue and climbing on our side. So even though we've had a down day today, currently this is still a bullish scenario because we're above the BBC. But we need to pull away from it, okay? And we need to take out this high. Now, whether price is pulling down from above or pulling up from below, the pullback holds more often than it doesn't. It even held here. This day we spiked it, but closed below it. And then finally, April 24th, we managed to close above it, right at the 50% fib. And now we're just sideways for how many? 1, 2, 3, 4, 5 days. Still got 2 days left and the rest of today. Okay, the ES. Now, all alerts, both the logic and the concierge, are created on the 30-minute chart. What's special about a 30-minute chart? It's just a chart, just a time frame I chose many years ago. And if it's not broke, I guess you leave it alone. The vertical line separates today, Wednesday. Here's Tuesday. Back here's Monday. The weekly trading zones, those are published Monday morning at 6:15 a.m. Eastern for over 15 years now. The first day we published the weekly trading zones was December 14th of 2009. When price rallies up to a weekly zone, we expect resistance till proven otherwise. When it drops to a zone, we expect support until proven otherwise. Support, support. We overshot the zone just a bit yesterday, heading into the close. And so the opening candle was right here. Now again, everybody had these targets 5 minutes ahead of the open. So we opened below the zone. We're above the BBC, but we got red and falling. Okay, and when you got red and falling like that, that's the time, even though the pullback holds more often than it doesn't, eventually it's going to trade through, as it did here. And this low right here, as you can see, is this low right here. I was gunning for this area right here, but buyers came in here based off that low from yesterday. Support sends us to resistance at the zone. Again, when price rallies up to a zone, we're expecting resistance till proven otherwise. Blue and climbing rolled over and became red and falling. Took us all the way down on the initial, this first red candle here, took us right to the short target, to the tick. That was this area right here. You see where the step line crossed red and falling, turning it to blue and climbing, making that an important price, important area. So we hit it, got a little bounce, kept going, hit the zone, which we expect to be support, got a little bounce, but continued lower all the way down. This zone is 54.53/54. And the low is 55.5. So we missed the zone by a 1.5. Okay. Support will send the market looking for resistance, which it found at the BBC. The pullback held. Really, you got resistance times like 3. When you trade through a short target and price comes back to it, it will quite often be resistance. When price pulls back to the BBC, we expect that to hold until proven otherwise. And you got the zone in there. So, great spot for resistance, but buyers haven't quite given up yet. Now notice that red and falling is starting to curl up underneath price. That means it's probably on its way to turning into blue and climbing. Okay, that just might get us back above the BBC, and if it does, be very careful right here. Okay, see where the red line got below the green line? That's a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. So if we manage to get back above the BBC on the 30-minute chart, make sure you pay attention to this area as potential resistance. The cross actually happened right there, about 55.58. But I'm always conservative, so I'd be calling it 55.55 if I were actually in a trade there. All right, the Dow opened at the zone, and we made a drop to the target. The target that was published 5 minutes ahead of the open. Okay. And what was that based on? That's market structure. Support sends us to resistance at the zone. Resistance sends us looking for support. And so we came down through the target, through the zone, through the next zone. We even spiked the next zone. Buyers finally came in. Now, this is Wednesday, Tuesday, Monday, Friday. People always ask me, you're always saying look left. How far left do you have to look? Well, in this case, you had to look back to last Friday. This low was 39.860. This low was 39.868. Okay, we We missed it by 8 ticks. That's support. Sent us all the way up to the BBC and the zone and the underside of the short target where we found resistance. We got that same situation where red and falling is starting to curl up. So we may just get a rally into the close. We'll see. But remember, you've got a bearish cross right about here. Okay? So I would wait for price to get above that. Okay? And 46.40 up to, no, I'd go 46.50 to 46.70. That's 20 points, enough to get your goal for the day. On the way down, I'd be careful in this area, but this would be a beautiful area right here. This would be tremendous. And it could happen today. On the Russell, here's where we opened, hit the BBC, bounced up to the zone, and then the bottom fell out along with the rest of the markets all the way down to the zone at 1929/30. That's the zones published Monday morning at 6:15 a.m. Eastern. Support sends the market to resistance at the BBC, and we know the pullback holds more often than it doesn't. So, question is, we're building a green candle. We've got a zone right here, which is potential resistance, 1959/60. And then the 30-minute BBC is at 1964. Okay? So the trade I would like would be, let's say 68 up to 70. That would be a nice 2 points. Or down here, 1938 down to 1934. 4 points. On the NQ, here's where we opened. Okay, we had red and falling overhead, so we get below the BBC and we go right to the target to the tick. Now that target, it's right there. See? Support sends us looking for resistance, which we found here. Now that high right there, if you look left, you'll see it's that high. That high was 19,611 3/4. That one was 19,622. Looked like they lined up. Okay, what's the high? 611. What's the high? 622. Yeah, we overshot it. Doesn't look like it, but we did. Is it that high? Yeah, 1623.75. There we go. Okay, so we get back below the BBC, blue and climbing turns to red and falling, and down we go. All the way to the next zone. We get below the zone. We don't have enough strength to do the pullback that we normally see on a slice, but we make it down to the zone at 19,101/02. Buyers come in, take us all the way back to the BBC. So far, the pullback is held over the course of 1, 2, 3, 4 candles now, 4 30-minute candles. And on the NQ, red and falling has already curled up and turned to blue and climbing. So, if price drops to this zone, it's probably going to run into support ×2. Crude oil. Man, oh man. We are below the lowest weekly trading zone on a Wednesday. However, by close of business on Friday, we expect price to be at or above the lowest weekly trading zone. Does it happen every single week? Well, over 15 years, it's happened a whole lot more than it hasn't. So, handful of times. But this is an extraordinary move here. Look at this one candle. Okay. Today's Wednesday inventory day. I didn't look at the inventory numbers. The high of this candle is 60.15. The low is 58. That's $2,150 per contract traded if you were in that move. Now, we sliced through the zone, ran out of steam, and retraced back to the zone we sliced through, and then continued in the direction of the slice. Gold, here's where we opened last night. Right at the BBC, we got red and falling overhead. Price tries to poke its way up to the target, doesn't quite get there. Makes it 33.37.6. But red and falling takes us down. We didn't quite make it to the short target. 33.09 was the short target, and the low was 33.10.7. So we missed it by 17 ticks. Support pushes us up to resistance. Resistance sends us down to support. And support sends us all the way up to resistance. Zone to zone, back to the zone. We're above the BBC. We've got blue and climbing, but the step line, okay, is crossing blue and climbing, which means this rally may be short-lived, because when the step line crosses blue and climbing, we expect a retracement back to the BBC. Same is true when the step line crosses red and falling, just the opposite direction. And silver. Here's where we opened. We had red and falling below us. When red and falling gets directly below price, it can become support, as it did right here. Pushed us up to the BBC, and as you can see, the pullback held and gave us a leg that took us to the target, through the target, and we found support at the zone. Support sends us to resistance. The pullback held. And so then we get a big leg all the way down to the zone at 32.53. Still one more zone below on silver. Now, only one of three things happens when price encounters a weekly zone. 70% of the times consolidation, 20% of the time is rejection, and 10% of the time is the slice. So, from this support, we've hit resistance at the zone, but the step line is about to cross blue and climbing. So we may be in for another leg to the downside. If we do get a leg to the downside, look for support in this area right here. Okay? And remember, it only takes 2 pennies to get your goal for the day with silver. So back to the daily chart, we're sitting right on top of that 50% reverse fib. Not much has changed. To become a member, go to mytradingiq.com. Watch some videos. There's a lot of information on the site. When you're ready to become a member, send an email to support@cfrn.net. In the email, let us know you want to become a member. We'll send you an email chock full of information about what it means to become a member. There'll even be a link you can click to become a member. You're going to get 2 hours of live training every trading day in an interactive environment. That means the conversation is a two-way street. As you're trading along in your demo account to learn the strategy, you're asking every question that pops into your head, and you get an answer. And you get to see trades put on and taken off over and over and over for the entire 2-hour period, except when there's audio problems. Along with the group training for 2 hours every trading day, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same from support to resistance, back to support, back to resistance, over and over again and again. That's why it's so important you learn how to read the chart so you know where to anticipate resistance and anticipate support. And based on 19,500 plus alerts, we know that about 20% of the time the market is going to do something other than the next high probability thing, for a myriad of reasons, and we don't bother ourselves with trying to figure them out because there is no holy grail. Okay, if you're spending time and treasure chasing that never get stopped out again thing, that's a tough road. There's only one secret to trading, and that's learning how to trade. As a passport holder, you get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. You're able to attend the members-only workshop on Thursday nights, and you get the golden key that opens all the private channels in Telegram. When you're on the trial, you have access to the public channels, but once you become a member, you have access to every channel, both public and private. Everything a trader needs, all under one roof, one low price. Send that email to support@cfrn.net and let us know you're ready to become a member. Pretty simple. Okay, Michael should be here, but he's not. So let me see if I can find him. Don't go away. We'll be right back. Here he comes. He's getting logged in right now.
I am getting logged in. I am just about ready. Okay, here we go. Oops, I gotta change my name. Let me do that really quick. Okay. All right, I am logged in, and you should be looking at my charts.
Yep, looks good.
Excellent. All right. Here we go. Just look at one more thing here really quick. Okay. All right, good afternoon, everyone. Today is Wednesday, the 30th day of April, the final day of April 2025. So if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for that trial. All right, click on the purple button and you will be sent to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, down at the bottom, if you want to have the indicators on your charts, you have to get TradingView. All right, the indicators that we use for the trade setups, the indicators that actually trigger the trades, you need to get TradingView because we only have those indicators on TradingView. To get that, if you don't have it already, click on this link right here. All right, get your TradingView ID. You can get one for free. Get it and give it to us, and we will send you all the information that you need to get set up with your TradingView indicators and get them indicating on your charts. All right, before you take the trial. So that was all that. Now, today's trading, I was really hoping to average over $2,000 a month this month, but we didn't make it. We're off by $130 a day, right? Over $2,000 a day. I'm pretty sure 1870 is pretty high as far as the overall averages go on a daily basis. But we did end up, I won't go into that too much right now, but we did end up having our best month ever, even though we did end up with the highest. Excuse me, again, even though we did end up with the highest month that we've had with one contract. We're up $35,530 with one contract on the month of April. Today we ended up with 118 ticks on the NQ, minus 25 on the Russell. The Russell, 2 days in a row it got me. 36 on gold and 51 on the ES. That put us at $1,462 this morning. Today it took 1 minute and one trade to get to $3,250, and we took a total of 29 trades this morning. So on the month, we're going to close out the month of April at $35,530 over 19 business days, averaging $1,870, sorry, $1,870 per contract per day for the month of April. On the year now, we're at $119,817. Again, that's with one contract over 72 business days, averaging $1,664 per contract per 2-hour business day. Now, if you have not, I'm sorry, the 2420 blueprint. The idea behind the 2420 blueprint is to get you up to 20 contracts over a period of 24 months. Now, we did do the 2420 blueprint from start to finish, starting in January of 2023, all the way to August of 2024. And it turns out that 20 contracts isn't as efficient trading when you're scalping like this. Right? If you're trading longer period stuff like the Logic 247, the concierge trade alerts, then it's good. But when you scalp like I do in the morning, 10 contracts is a great number. It's much more efficient than 20. What I mean by that is you get a lot of slippage when you have 20 contracts and you're trying to trade really quick like I do. A 4-tick trade with 10 contracts could turn into the equivalent of a 2-tick trade with 20 contracts because of the slippage. So it's I don't know, there's good and bad with it, I guess. If you only take 1 or 2 trades and you quit when you get your goal for the day, then that's not bad. But if you want to trade more, then fewer than 20 contracts is better. 10 seems to be a great number. It's working great for us so far this year. And we found the 2420 blueprint. We're up to 4 contracts now. We just finished a month with 4 contracts. And when I start back up on Friday, I'll be trading 5 contracts. Well, I'll be trading 10, but we would be recording for 5 contracts. If you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year you did everything just like me, you would have only had to work 9.13 hours and you'd be up $31,972, averaging $3,500 an hour. That's pretty good money right there. $3,500 an hour. What is that on an annual basis? 7 million or something like that. I don't know. 3,500 times 40 equals that times 52. 7.28 million. That's what I thought. Pretty good money if you could do it every hour, 8 hours a day. But that's not realistic. All right, so let's get into the actual trades. Where are they? Here they are. The actual trades. What do we trade most today? Well, we traded gold and the Russell least. So I guess we'll just start out. We'll just start out here, go left to right. Okay. In the gold today, ooh, that's a big line. Didn't mean to do that. Tell what I was doing with my mouse. All right. Scrolling all the way back. I really didn't trade gold much at all today, did I? This is today? Yeah, this is all today. I find that hard to believe. Well, either I cleared them all out or I didn't mark them up, but I must have cleared all the trades on gold because I only have 1 right there, 1 break even. What I did do on gold though, I stopped out my very first trade on gold. I must have cleared them all for some reason, somehow. But my very first trade on gold, I got a -6 on it. I was going to bump my stop to break even, but the market just dropped on me while I was doing it and ended up giving me a -6. The next trade on gold, I got a +25. That put me at 19 total. The trade after that, I got 3 more to get me to 21, or 2 more to get me to 21. And then I got 15 more to get me to 36. And then I got a few break-even trades on the gold. That was all I did on gold today. Okay, it was pretty choppy. All the markets were pretty choppy today. You know, there's some really high impact news coming out tomorrow and really, really high impact news coming out Friday morning. So I suspect the markets are going to be a little choppy. You can see the Russell. I must have erased all my drawing objects. How did I do that? Why would I do that? Anyway, on the Russell, we only had 1 trade and it was a stop out. We were -25 on the Russell. Okay. And on the ES, did I erase everything on the ES too? No, I have some of the things here on the ES. You know what? I think when I rebooted, something in here. Anyway, I'll tell you on the ES. We started out with 8 ticks. Then we got 4 to get us to 12. And then 3 more to get us to 15. Then we had a big trade that got us up to 35, a 20-tick trade that got us up to 35. Then a 4-tick trade that got us, a 2-tick trade, sorry, to get us to 37. Then we went to 45, then to 49, then to 53, then to 57, and then we stopped out, went down to 47, and then we got 4 more to get us up to 51, and that was when we ended it. So those last bunch must have been right in here somewhere. Break even, the break even, then this I believe was a plus. The stop out. So this was a +4, and then we stopped out -10 to get us down to 47. Then we got a +3 to get us to 51, and that was all that we did. There was a bunch of sideways action in here during the break. Now the NQ at the end of the session this morning, I drew this on the NQ. You know, when price was like this right here, I drew this stuff on the NQ saying we have this right here. We have lower highs and higher lows. Is that right? Higher highs and lower lows. Higher highs and lower lows is what I meant. And that it was probably going to pull back to here, and this would all you should be looking for. If you're going to take the trade, the long one, you should be looking for it to get up into here, because it's probably going to turn around right there. Okay, and it got right back up into there, and it didn't turn completely around, but it did stop there, and it pushed down and just stayed there for a while. I guess if I drew this, if I drag this thing down to here, see, it's never really left that level. It's just kind of stuck there. But that was the NQ. I'll read through the trades that we had on the NQ this morning. The very first trade that we had on the NQ, I'm sure they're all deleted to all the arrows and stuff that I drew up until this point right here. The very first trade that I had on the NQ this morning was 65 ticks. Okay, and then I got a little bit more, got us up to 85, and then I stopped out down to 25. Then I stopped out again down to 35. Then I got some profit, got us up to minus 35. All right, and then I got some profit, and I got us to minus 8. And then 75 ticks got us to 67. Then a little profit got us to 73. Then 75 ticks or so got us up to 143. Then, yeah, that's right, got us up to 140. No, wait, no, we got up to 73. And then, so 73, and then 143, and then 118. I don't know what happened in there. I didn't include the last one that was 75 ticks either, but we ended up with 118 on the NQ. Now, what I was going over in here was if you're trading within a bar, let's say, see, I switched this to a 50 range from the 47 that I had been using. And what I was saying in there is if you're having issues, let me bring this over and we'll just talk about this. Did you say you don't have a demo version for NinjaTrader, only for TradingView? I don't have these indicators down here. These right here. We don't have those on NinjaTrader, Bob. They're only on TradingView. Okay. Now, we have this, the YBR, we have that on NinjaTrader. But we don't have this down here. You know, the stuff that we have on NinjaTrader, I'll show you. We have, let me just take the context off and I'll show you a different way. That and that. That's what we have on NinjaTrader. Okay, that's not what we're using in here anymore. I mean, you can still use it if you want. I mean, it worked great for the time that we did it. It's just, there's a lot more to it than what we're doing right now. You know, you gotta count the number of things you can see. You gotta make sure they're not crunched up and all that stuff. Where now, you know, when they're crunched up is some great trading usually for us. Or before we would avoid the trading when it's crunched up. So in the past, you would only trade when there's a strong trend and you wouldn't trade when there's not. And most of the time, like 80% of the time, there's not. And 20% of the time, you do have a trend. So you get 2 or 3 trade opportunities in here, 2 or 3 trade opportunities in here, and then all this choppy stuff, you wouldn't have any. Where now, you get trade opportunities everywhere. In the choppy stuff, in the trend stuff, you get trade opportunities everywhere. Okay, and with all these indicators on here, you had to know what you were doing. You had to know, to wait for price to come down, hit the ribbon or not hit the ribbon, and if it did hit the ribbon or if it didn't hit the ribbon, the slingshot had to be a certain way. And this was a little more complicated, but all this is the stuff that we have on NinjaTrader right here. Okay, the stuff that we're using in the room is just that, and and for the most part, it's that and that. But every now and then, like I did today for a little while, I use the ultimate slingshot to give you the actual divergence trades. If I'm using both of these down here, then I'm not using this up here. Okay. So, with this is the divergence trades, and divergence trades work best when the markets are choppy. And defining a choppy market, as it turns from trending like this to choppy like this, it takes 2 bars to go from overbought to oversold down here. And if you have more than 2 bars in a leg length, then you're going to get a flat spot down here. Right? Whether it's at the top or the bottom, you're going to get a flat spot down there. And so when you have a long leg like this, you anticipate that you're going to get a pullback somewhere at about right here. Either way, you're going to have a flat spot, more than likely. All right, either way, it's probably going to pull back deeper than 2 bars, trying to get up to the midpoint between that there and there, right? So you wouldn't want to do an aggressive trade here. You'd want to wait for a conservative trade. Okay, conservative meaning it comes out of the overbought in the direction of the trade. Okay, so right now you'd be looking for a short. You'd be looking for a shorting opportunity, a shorting conservative trade. Now, if I put this on here, I put the context back on there, you're below the YBR. So when you're below the YBR, you're looking for shorts. When you're above the YBR, you're looking for longs. So right now, I wouldn't be doing an aggressive trade here because we're likely to get a flat spot up here. And when you get the flat spots is when you stop out when you're doing aggressive trades. So because of that, you wait for the conservative trade, which means it's going to come out of the overbought. And you wouldn't even be using the slingshot. You'd just be using the trigger. Okay. Oops, didn't mean to draw that. But that is what you got going on. See how it's up there in the overbought already? If you were aggressive, you'd already be short right here. You'd be bumping your stop to break even right now. Probably pretty close to it. But there's a good chance that it's not going to close down, that it's going to keep going up and get up, into this area right here, or possibly even up to this area. If you just did this part of the leg length right here, you see how the leg length has two areas. You have the one whole leg length right there, and then you have this smaller one right here. Either way, there's a chance it's going to pull back and give you a flat spot. Now this one didn't, so if you did take the aggressive trade right here, then you would have been okay. And if you took the conservative trade right here, you'd be short right now too. You'd be short right here instead of up here. Now the conservative trade, you'd expect it to get down to here, the swing low at least, which it just did, right? But you wouldn't want to do the aggressive trade, because with the conservative trade, you're at least waiting for it to continue in the direction of the trend by coming out of the overbought. But with the aggressive trade, you're counting on it stopping right there at some point, some pullback point where it's found some resistance, but there's no resistance right up above it right here. The first resistance would be here, and the next resistance would be here. Okay, does that make sense? I know it's a lot of words, but so the conservative trade, you would have been short right in here right now. You'd have been taking profit. All right, and this is a 50 range. Now, I've been doing it on a 47 range all morning, so it's easier to count. It'd be 12 points from the top or bottom of the bars where you want to put your order. But it's basically the same thing, as you can see. Okay, so let's see if we can get any trades off in here now. So, one of the things that I was pointing out this morning was just notice how long the leg length is, right? If you have a long leg length, then the pullback is likely to be deeper. So you want to wait for the conservative trade. Right, and switching between them is simple. You don't have to add anything or remove anything. You don't have to do anything really. Just enter at a different place. And for those of you guys who missed it yesterday, I had done a keystroke thing to auto center this, but if you just double left click right here on price, that also auto centers it. This is this here, DOM. Double left click on price, and it'll auto center the DOM. One of our guys, Mike Carr, figured that out for us and passed it on. Very useful piece of information. Okay, so now here, if you got a down close on this bar right here on the S, that would be a great opportunity to trade. You got an up close, that's not a great opportunity anymore. Right, unless it went down right now and closed right here, it would be, yeah, see now it's going to do the 100%. It did the 100% now, so now if you got a down close, it would be an okay place to trade because you get 100% retracement of this leg. Okay, if it goes up any more, then you're running into trouble, right? So part of the thing that I was showing this morning at the end of the session this morning is when you have a leg that exceeds the prior swing low and the prior swing high, like we have here right now, you're not looking anymore for this to get down to the swing low. You're looking for it to get down to the midpoint. Keep that in mind. Okay. I don't have time for that today, Bart. I'm out tomorrow too. And I'm booked up pretty much on Friday too because of that. Didn't we back everything up like a couple of different times? All right, see, so this is just going further and further. So now this is not the spot for this anymore. You just draw the fib on it like this. All right, if it hits the YBR, it's going to switch around anyway. But now this is what you would expect out of it on the downside. Okay, so right there is what you'd be shorting, right there. This is yes, yeah, this is the yes. Okay, so right there is what you'd be shorting, and I just did, and I just bumped my stop to break even. And you should expect it to get down to here. So trail your stop accordingly, right? When it gets down here, you want to trail your stop really close. I just got 1 point out of that. But I expect it to get down to here and possibly turn around when it gets down to here. Okay, possibly turn around. It's turning around right here before it got down to there. You're not interested in long trades right here. Okay, so it just came out of the oversold. You're below the YBR, so you're not interested in long trades. So we picked up 1 point on that move. 1 little point. Yeah, Bart, we'll have to work something out next week. There's no sense doing it over the weekend. But I know I have like 5 appointments already scheduled for Friday, and I'm going to be out all day tomorrow. And I have more appointments scheduled for this afternoon. All right, so you see, this is not, it's a potential trend change right here. When you get one of these big legs like this, it has a lower low and a higher high, it's a potential trend change spot. And I'm happy to take the 4 ticks out of that I did take, and it's flipping the YBR right here. When this bar closes, whether it closes up or down, it doesn't matter. You hit the YBR is going to change. Okay. You had a similar trade happen over here on the NQ. See, I eyeballed that one on the NQ. Let me see if how close to right I was on that. Okay, so I was a little off, but turns out price got up to exactly the spot, but right here is where it should have been. Maybe just a little bit higher. But this last one that came out of the overbought did not put in a lower. I did not get into the oversold, so you're not going to take a trade right here either. Okay. And over here on the Russell, this was a good trade right here. This was a valid, good trade right here. The entry point was pretty good on that. Looking at this right here for your entry point, right? It wasn't great, but it was okay. Over here on the gold, this is not, it's a short right there. It's a valid short right there where it is, but let's look at the gold. Okay. This from here to here is your leg length, all right? From right here to right there is your leg length. So this is not a great spot to be shorting gold right in here. All right, now Dan, I'm not sure if you're still watching, Dan, but from here where it came out of the overbought to all the way over here where it got back into the overbought. That's what it is. What did you take out, Bart? Okay, so we have 10 minutes left in here, guys. 10 more minutes. And we got up to this. We changed the YBR there. I really kind of want this to hit the YBR and flip it around. This, you want it to get up higher in here. All right, you're not going to have a short trade anyway because this was the oversold. This, if it gave you a down close right here on the Russell, this wouldn't be a bad place to short it, okay? But you would have been going long from back here a few minutes ago. But if you're looking for a short, then this wouldn't be a bad place to short it, but it's not a good place to go long, okay? This over here on the gold is still no good. Okay, you said talk out the, I don't know what that means. Talk. I think you meant took out the, and you didn't finish. Trading View and Ninja. So your desktop is messed up, is what you are saying. Okay. So I'm waiting. It just came out of the oversold, just barely here. Gave enough to get you stopped to break even, maybe take a little profit on the ES. It didn't really make it into the overbought. So in this area right here, right now, guys, where it's just going back and forth like this, it's not quite making it into or out of the overbought there, overbought and oversold. So you really don't have anything that you can do. It's one bar going back and forth. You need 2 bars to make it from the overbought to the oversold, and you have 1 bar going back and forth here. That's a really tight chop range right there on the ES. So we're not going to be able to do anything with that right now. Okay. So silently waiting here. We need this to give us a down close, pull back a little bit to get that into the oversold. You could have done an aggressive short right there at the open, but it's really, really tight. I think you could have done an aggressive short at the open. Let's see. Yeah, you could have. That would have been highly aggressive. We're looking for long trades here, and here, and I'm looking for short trades on these 2 on the outside. All right, but we can't take a short trade. This turned out to go all the way back up here to the spot that I wanted it to go to, but you can't take the trade until it gives you a move down into the oversold and then back up. Okay, and the NQ pulled up to where I thought it was going to go, and that's going to switch things around. We're not going to be looking for short trades there anymore. Did I ask you a question? I said, what did you mean by talk out the? Oops, my mic was off during that. I said, okay, so we flipped the YBR off. I mean, flipped it off. We flipped it around. We didn't flip it off. We flipped the YBR around right there. And so now we're looking for it to pull back down into this area right here. Okay. And you see with these long leg lengths, you're not going to want to be aggressive. You're going to want to be conservative with the long leg lengths. Yeah, but I don't have time to do a remote part, and I won't until next week. I can't do one today. I'm not going to be here tomorrow, and I'm all booked up on Friday. We can schedule something for Monday if you want. Okay. Then we will do that. For Monday, 2 o'clock maybe. Okay. Remind me on Monday, okay? Wow, this thing just keeps going. Same thing with the ES. Let's get rid of this on the ES. We'll start the new one. The new one so far is from here up to here so far. All right. Well, we just don't have it. So we're going to wrap it up like this, guys. We didn't get any more trade setups. We just got the one that we took, I think, on that ES. And we got 4 ticks on that. All right. So I'm going to wrap it up by saying if you have not taken a free trial, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Click on the purple button. And that will bring you to this registration page. All I have to do is fill it out. Down here at the bottom, make sure you give us your TradingView login ID. The indicators that we have that we use in the room are only available on TradingView. Okay, do that. Now today we're going to wrap up the month of April with $35,530 per contract. That's our best month ever. Our last one was like $34,400, so we beat it by $1,000. And the last one was actually 21 days, and so we did it. We beat it by $1,000 in 2 less days. On the year now, we're at $119,817. That again is with one contract. So we are a third of the way through the year. We're at $119,817. 2023 and 2025 is going to be different. It's going to be different. And that's it, guys. With that, I'm going to wrap it up and send it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready. He's taking it over now. And there it is.
Of the recap of the morning session.
Today it took 1 minute and one trade to get to $3,250 with 10 contracts on. $3,250.
Good job.
Thank you. Thank you very much.
All right, guys, we've covered everything. We'll take one last look at the daily chart of the S&P. And we're sitting right on top. Now we've been all the way down to the BBC. Pull back holes more often than not. So we hit support. This was support times 2. It has now bounced us back just above that 50% fib. What's really important is, can we close above yesterday's high? If we can close above yesterday's high and get up into the body of that red candle, we should have some fairly smooth sailing, almost to the 62% reverse fib. So let's wrap it up with our good word for the day. Consult God on your daily to-do list. Psalm 37:23. A person's steps are established by the Lord, and he takes pleasure in his way. To come up with a daily to-do list that keeps your peace and joy intact, consult God. When you take on too much, you set yourself up for failure and stress. If you're wise, you won't schedule more than 1 or 2 major tasks in a day. Life doesn't run smoothly, no matter how badly you want it to. So build in time for interruptions, traffic jams, lost keys, slow-moving people. You get the idea. And be careful about multitasking. Studies have connected high-stress multitasking to short-term memory loss. Experts have concluded that multitasking makes you less efficient because it decreases the brain power needed to execute each task. So make yourself finish one task before beginning another. To be productive, you must be focused. And one more thought, a very important one. Solitude is essential to success. Before Jesus picked his disciples, fed the multitude, and calmed the storm, he took time to be alone with God in prayer. He did, but we don't. And it shows up in the results we get. We pick the wrong people, lack the necessary resources to meet the need, and then the storms of life just overwhelm us. The great thing about prayer is that you can do it anywhere. In a traffic commute, in the checkout line at the supermarket, on your lunch break, or when your eyes first open in the morning. Bottom line, since God takes pleasure in each step of your life, begin to involve him more. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.